你知道吗？在今天的对冲基金行业，10亿美元只是个起步价，全市场只有7%的基金能做到这个规模，但他们却掌控着整个行业80%的资产。剩下那些中小型基金，尤其是刚起步的初创团队，处境非常艰难。那怎么办呢？很多新基金为了拿到第一笔钱，不得不接受2种方式，要么给早期投资者费用减免，要么找种子资本合作，放弃一部分营收，甚至有人把它叫做出卖灵魂。换个好听点的说法叫与加速器合作。如果你不想走这条路，也可以先从亲友、以前的合伙人那里募资，虽然慢一些，但只要你能持续创造超额收益，长期来看也能成功。那现在开一家对冲基金，最低需要多少钱？但业内有个建议，准备好2年的运营资金，而且这笔钱不能指望任何管理费或业绩报酬，也就是说，你至少要有2年白干的底气和积蓄。还有一个很扎心的现实，大多数投资者宁愿把钱投给 Citadel、David Tepper 这些大牌，哪怕业绩一般，也没人会因为这个解雇他们。反过来，你想投一个刚出来的新人，风险太大了。不过好消息也不是没有，那些顶级基金规模太大，容量不够了，很多都开始对新资金关门，这反而释放了第2代人才，他们从这些大平台分拆出来，带着血统自己创业。虽然血统不是成功的必要条件，但有了它，募资确实容易得多。所以你看，这个行业的真相就是，要么你有血统，要么你有2年生活费，要么你准备好出卖灵魂。
Pat, $1 billion is a big number to start with. Very few funds have that kind of red carpet rolled out for them. So funds who are just starting, how do they do it today? In a time when Citadel, Balyasny, Bluecrest, Millennium have these massive platforms with huge back office, with all the compliance you need, how do guys start with their own firm and their name on the door?
It's tough. And if you look at the industry as a whole, it's even harder. If you look at the statistics, there's about 400 plus funds that manage $1 billion or more. That's only 7% of the industry as a whole, but they control 80% of the assets of the total industry. So it's tough for any small or mid-sized managers, particularly the startups. To be successful in marketing, you have to incentivize investors on day one to allocate capital. So what you're seeing today is the rise of founder share classes, which is a break in fees or additional capacity down the road. You're also seeing seed relationships where managers give up a percentage of the top line revenue share.
But if you've got to give a break in fees from the get-go, doesn't that start you off on a really bad path? Because once you give a break to one guy, you know, everyone is going to expect it forevermore.
It's your timeline. How quickly do you want to ramp up assets to get to an institutional size fund?
You want to sell your soul,
raise,
essentially?
Well, let's call it partnering with accelerators. To raise capital from pension funds, sovereign wealth funds, right, you need to have, let's say it's $100 million. They're going to rate a 9-figure check.
Little?
They can't be more than
more.
Many pension funds, if they rate a $100 million check, can't be more than 10% of your fund. You're going to need to get to $1 billion, right? To access that marketplace, if you're getting a $100 million check from a seeder to give up 20% of your business, they'll get you there that much faster. Now, Stephanie, there's plenty of people that are raising money from friends and family, from past partners. It may take them a little bit longer to get to that institutional level, but if they're delivering alpha, if they're performing the way that they told their investors they would, they're going to be successful in the long term. It's just how quickly do you want to ramp up assets?
Once upon a time, you know, the saying went that all you needed to open a hedge fund was like a clever name and a Bloomberg terminal.
2 guys in a Bloomberg,
Yeah, so what does it take?
Or 1 woman in a Bloomberg.
Excuse me. Thank you.
I use guide generically, right? Today, what's the minimum in assets under management you need to keep the lights on?
There's no minimum. What we tell our hedge fund managers, though, is to have 2 years of operating capital before launching a hedge fund, right? And that's before counting on any fees, before any management fees or incentive fees. Have 2 years ability to run your business. Then from there, it's all about returning to your investors what you stated you would. I mean, it's all about knowing your value proposition and your objective for your fund. So if you're looking to return S&P level returns with half the volatility, go out there and do it and you'll be successful.
But are investors or potential investors even willing to look at startups? In the last 5 years, it just seems like the big guys, even if their performance isn't so great, just keep getting bigger. If I'm an endowment, if I'm a capital allocator, I know nobody's firing me if I give money to Citadel or David Tepper or Bill Ackman. So how does that help the new guy who's got some great, unbelievable strategy? Who really wants to take the risk?
So the success of the largest hedge fund managers in the industry, their success is allowing for a second generation of hedge fund managers because they're reaching capacity. A lot of the largest funds out there are shutting down their strategies,
like whom?
or
it
they're
seems
having
like
minimum.
Millennium, Bluecrest, their doors are open for new dollars.
There's a whole host of multi-billion-dollar managers that don't have capacity issues. But if you look at tech-focused managers, right, where they reach multiple billions of dollars, they have to close their doors to new capital, and that releases a new generation of hedge fund managers that are spinning out of some of the most pedigreed managers on the street.
Well, that actually brings me to my next question. That's where the new talent is coming from. They're coming out of the established funds because with the prop trading business effectively gone, you know, that's one source of talent for the hedge fund industry that just isn't there any longer.
So a lot of the billion-dollar launches come from pedigreed managers spinning out of some of the largest fund managers on the street, a lot of those.
What's an example?
Well, I don't know if we're going to mention names today in terms of hedge fund managers specifically that are launching, because there's a host of managers that launch that would not be quote-unquote pedigreed managers, but are able to deliver top-tier returns to investors, and those managers are going to be successful. So pedigree is not a requirement to be successful in the hedge fund industry. What's that?
Makes it a whole lot easier to raise money, doesn't it?
Investors like to allocate to portfolio managers with whom they're already familiar with. So if they had a previous relationship with that manager at an established fund that had the ability to repeatably produce alpha, they're going to be more comfortable allocating at an earlier stage.
I'm going to guess if I was a long-term investor of David Tepper, or wanted to be, because, you know, he's giving money back and he's got a guy spinning out, I'd probably be interested.
Yeah. Most investors probably would too.
Congratulations. Thank you so much for joining us today. Patrick McCurty, he's the head of Cap Intro at Wells Fargo.